So we had a selling bias initially. So we're looking at prices, it was pushing up, pushing up, pushing up. When we got here, we're looking for a reaction. Remember, we had run a fib, if I'm not mistaken. I had a fib here. And I think I actually executed a sell around this area and it took me out. I honestly executed a sell here because I had a pattern. You can see I had this high and I had this order block here. So price just turned and came back up. But what I want you to notice is TDI had nothing here. We had no confirmation whatsoever of this sell. As soon as this price started to push back up, bless me. As soon as this price started to push back up at the close of this candle, where we're expecting a retest, at least TDI should give us something, which takes us to, if you want to sell TDI, must at least be crossing the yellow baseline or below or retesting the baseline. So after the highs were extended, I want you to notice the price came and bounced off yesterday's high, which is this blue tracer here. So this was the highest high of yesterday, and this was the order block. So as soon as the pattern forms, whether it will play out or it won't, that information we won't know until price plays out. So I executed a sell at the close of this candle in anticipation of the break. Then from there, price just accelerated down. They also broke this order block, which I had initially when I thought that this was the high. So they broke that order block. Then from here now you could have still run your fib because now we had an intraday trend. So if you ran your fib from the highest high to the low, right, what you notice that price almost came to the 38.2, right, which is near the order block. At the same time, you're also anticipating an ID 50. So again, a pattern formed right there. We had a lower low, a lower high, broke the order block and retested with a nice doji. So if you're not sure about this entry, you simply have to wait for more confirmation. So here's the nice confirmation. TDI is trading below the yellow baseline. So now we can sell comfortably and we can hold. So as long as you're in line with the TDI, in line with the trend, if you're trading boom and crash, you should just aim for 80 to 50 pips will play out, especially if you're trading with the trend. If you're trading against the trend, taking retracements, you most likely get 30 pips. So that's the information you should know as well. So looking into today now, I'm going to start it on the daily. On the daily, you'll see I've got another fib there. This one here based on this high and this low. So price is currently inside my point of interest. And yesterday looks like we had an inside bar. I hope that's clear there. Like a doji, then we had a follow through. So today I can say my bias is still bearish. But before I sell, I need a pattern to confirm that bias. So as much as I want to sell, I cannot sell until I get a pattern telling me that I can actually sell. But as it stands right now, probabilities are very high for this price to actually drop. So soon as you see the daily candle go red or black, depending with your color, just know that this price will most likely get to the 50 EMA between today and tomorrow. If this candle goes black at any point during today, that will be a bearish price action in motion. So where can we get entries now? So when we come to H4, you see that we've got a broken structure there. Let me just remove this. Okay, let me see. Okay, just confirming if I'm sharing the screen here. Okay, so from this push from yesterday, what you will notice is I had a zone here, this broken zone right here. So today, that's our guide as well. If price comes below that zone, we can potentially sell. But if this price stays above this zone, this price might be sideways, it might be in a range, or it might actually be bullish. All right, so going to H1, H1, we need a reversal candle. That's number one. Number two, you will notice that price is currently in or near an order block. Right here. Okay, this is a visible order block for everybody. So price is within that order block there. So we cannot sell until we get confirmations. Remember, if you're trading above the 13 EMA on H1, price is still bullish. No matter how good the setup looks, price will be bullish in that particular intraday move. So we cannot sell here until one, we get a reversal candle. So we need either a doji, bearish engulfing, pin bar, something we know. We need to get an H1 candle rejecting this zone for it to be valid. That's number one. Number two, we need to get the pattern from M15. So we are going to notice price will give us a higher high, then they will break an order block, then they might retest it, then continue dropping. Then at that point in time, if price is below or showing signs of coming below the 13 EMA, then we can sell. So we might even get a huge candle like this. As long as we don't close below the 13 EMA, price most likely it won't play out. It will still be a very early entry. And if you are taking early entries, just use one position. Get your feelings and emotions involved in the trade. I'll show you an example. Remember where we're saying we're selling yesterday? Price actually came below, but then they came and closed back above the 13 EMA. So this shows that this trend is still bullish. As much as we wanted a sell, we were still bullish. If you notice, the sell then eventually happened here. Here we got a close. Price continued to push down, rejected the 50, came back, retested the 13. We are still below the 13, and that right there is bias. So if M15 gives you a pattern, you execute. So right now on C5, let's wait for H1 we'll still keep waiting for H1 until it gives us a reversal. For all cells, check there is a reversal on H1. So we cannot trade without seeing a reversal unless you're so confident about the overall bias. Then you can use sell limits and you can execute before maybe H1 confirms. But if you're growing an account, if you're still trying to be profitable, if you don't have much to risk, rather wait for safe entries. So here we'll wait for H1. Then if our price starts to give us that motion of coming back below this level as well, remember this level here. If price shows the signs of coming and closing below, then we can look to sell. And I want us to try and hold it until it gets to at least 43.20. That will give us like a 100 pip trade. If we enter around here and we close around here, that will give us about a 100 pip trade. So I'll say that's my view in terms of C500s. Then going to C1000, I just realized we just missed a setup here earlier. So let me just go to H1 quickly, see what we have. All right, you can already see the reason why I'm saying we missed an entry. Price was actually below the 13 EMA, this close here. So this was like what, 2 hours ago. So in this area here, this is where we look for setups. If there is a pattern, you can execute. If there's no pattern, sometimes we have to wait for price to pull back before we actually jump into the trade. Again, here you can notice we caught a nice sell yesterday. I think you guys mentioned it took you out. I want to look at that setup and I want to explain a few things before we look into today's trade. So when we jump to M15, yesterday's price, all right. So this is what I was looking at. Remember, we're stalking. Price dropped, the initial drop from this high here. So initially, I think I actually sold here as well. No, if I'm not mistaken, I had one runner here, and I was waiting for price to break this level. At that point, this was my point of interest. So I wanted to see a break a retest, scale in, then a drop. So what happened is price started to push up, and I was looking at TDI. I was like, no ways, this price will most likely push up. And I think I sent that message in the group. So we closed the runner with a small loss. Price came, created a fresh high here. Then from here, they gave this move. So you can see I didn't want to chase price or enter at the top. I waited for a confirmation. So price pushed aggressively down. And what I did is I marked the order block. So the visible order block first, which I had, was this one. Then the next one was this big candle. So you just mark the low, then I ran a fib. After running a fib, you can see price came and started bouncing off 38.2, which was below the 13 EMA. TDI was below the yellow baseline. These are now confluences showing me that I'm right in my direction. So I said I sold. This price came, sold again at the bottom here because I was also waiting for the break of this level. So soon as we broke, I knew we were coming down, right? But the only hard part of this trade was holding this pullback. So what I want to say is, remember, if you're selling on any time frame, depending on the time frame you sell on, if you're seeing patterns forming on M15 and you execute here, your stop loss has to be above the last high, which is this one. So anywhere above this, you have to calculate now. If you enter your position here, again, stop loss still has to be above the last high. Why we say last high? Because price moves like this. If it's a trending market, isn't it's creating lower highs, these lower highs here. So if you're selling anyway in here, whether it's an early entry or a late entry, stop loss is to go above the last high you see, the last visible high you see. You don't have to struggle to look for it. Put your stop loss there. Then price, even if it retraces, most likely it will just get to equal highs. Usually that's the worst case scenario. Sometimes it might spike above, maybe create a new pattern, but the best way is to just put your stop loss above the last high. So if you're in this trade, you had to put your stop loss above this high. So price retraced. As it was retracing, I ran a fib from here to here. Then I marked some few points of interest, and I also realized that price can still come back to the order block. So this is what happens. Let me explain it again. If price is pushing down, right, there is no guarantee that the pullback is coming to this order block. There is no guarantee that the pullback is coming to this resistance zone. There is no guarantee that price will hit at 38.2. We don't know. When you plan your trade, you should plan it based on the worst case scenario. The worst case scenario of this pullback is price coming back to the equal highs, then dropping, which means for any point you sell it, stop loss, safer stop loss is always outside the range. If that's your entry time frame. If you've entered on the 5-minute time frame, it's the same thing. You use the last high you see if you're selling. So let me try to give a quick example there. Okay, if we go to M5, right, this was M5 yesterday. So price is pushing down, price is pushing down from this high. So if you enter anywhere in here, stop loss is to go above this last high. If you enter anywhere in here, stop loss is to go above the last high. Enter anywhere in here, price is to go above the last high. So if you notice, after this move, price came and sort of reacted near this zone, which is now a resistance. They didn't come to the equal high, but for this part, they came to the equal high. So those are the things you need to know. We won't know until price plays out, because people ask me a lot, which zone is price going to reject on? We won't know. The only thing we can do is mark your points of interest, then trade accordingly. So again, that's why most of the times we say wait for H1 to close so that you can see what your price actually is doing. So here H1 was showing me that we are trading below the 13 EMA. It was giving me a strong selling bias. M15 gave me the pattern. So this sell played out nicely. A nice drop to this level. If you notice TDI, like I said, we're trading below the baseline. Then price sold. I think I exited here because I wanted to exit before swap time, so I closed. Then price continued to drop a bit. So I hope that's helpful for those who are still struggling on entries and where to put your stop loss. And always try to have your entries near the 13 EMA. If you're using the 13 EMA, use it as your entry point on H1. Try to enter when prices near the 13 EMA because from there you'll get an impulsive move. If you enter a bit late, the risk becomes big. The reward becomes small. So it's always good to enter before the impulsive move happens. All right, so looking at it today, what do we have here? You can see we had, this was today's high, right? Today's high is also bouncing off, today's Tuesday, it's bouncing off Sunday's lows, right? So always pay attention to the previous day's lows and highs. How do I know that? Because you see, I've got a little indicator showing a line there. If you don't have an indicator, just put the lines manually. There's nothing wrong with drawing them manually. You see this low here from Sunday. It's this line here which you see, right? So if you just extend it, you see that's where price respected today. They created a high, then they broke this order block here, then they retested. So we could have jumped into a short-term trade. Then we use yesterday's lows as a take profit. So already, no matter how you look at charts, as long as you understand what price is doing, it becomes a bit easier to formulate a setup. So if you notice, quick trade there, let me try to zoom in. So we had a quick trade. Okay, we had a quick trade right there, and that trade was about, so anyway, in here you could have entered. That trade was about let's see, 30 pips. Once you hit 30 pips, you are down for the day. If you had taken that trade earlier, you're down for the day. You do other things. If you want to still trade, trade on demo. Once you secure 30 pips, you call it a day. So right now, how are we looking at C1000? So let me just check the weekly. Weekly, I can see I'm bearish. Daily, also bearish. We could get a selling day. We could get a retracement day. So two things can happen here. Let me actually remove this fib and okay, but I just hope it's clear. When we drop to H4 now, we're looking for supply and demand zones. Okay. So what I also want you guys to notice is that sell setup last night. I was looking at these lows from last week, and I realized that we are actually rejecting those lows. If you notice at the top, I also have points of interest where we can sell from, you see. But the fact that price was showing me a rejection here, I decided to take a sell. So at the same time, I know I'm open to seeing price coming back either up here, or even back into this same zone just to take out this high before they sell again. But at the same time, if we have momentum in the market, then we might just get an immediate sell. So from the 4 hour, the only supply zones I see would be this order block here at the top. That's a sell area there. This one is a minor one. So you can see it's already been retested. This is also a minor one because there is no impulsive moves yet. So for now, I think this price can go either way actually. So let's just stoke and maybe drop down to a smaller time frame. Let's see what each one is got. So if we drop to H1, okay, we are right near our high, and the peak has created this order block to the left, and I'm going to use this wick here as a point of interest. Okay, so currently I would say that's my point of interest. This is based off this high here. You can see this high was retesting yesterday's order block here. So these are all confluences which line up. Sometimes I just don't put them on the charts, but price is actually respecting that zone. That means we can still actually get some sales. But at the same time, I want to pay attention to what the baseline bounce is doing here with the TDI, because we might actually get this move, then get a sell. You get it. So I also want to pay attention to that price action here. So when we drop down to smaller time frames, we are sort of in the line in terms of direction. Price can go either way. If we go to M15, usually when I see the 200 EMA in close proximity, what I like to do is mark that area. So as much as we are bearish, be open to seeing this price even doing a run all the way to the 200 EMA before it starts to sell. That's a possible play. At the same time, we've got an order block here. We've got another order block slightly below. We've got this broken zone, and we have this impulsive move, right? So trading what we're seeing and not what we anticipate. From what we're seeing right now, the sales are in motion. So if we are working with that information, this would qualify for an impulsive move. So after you run your fib now, you can see it's lining up with certain points of interest, starting with this earlier low here, which was broken. When price gets here, it will be near or on the 13 EMA. That's the first point of interest. So if price respects that zone, we can get sales from here. That's the first scenario. Second scenario is price can now push up into the 50% retracement level, which is in line with this order block, which is also in line with this 50 EMA, which is also near the 61. So price might come and respect this area and drop. That's a possible play as well. Then the worst case scenario is price coming to either the equal highs or extending the high before selling. So if we want to sell, I think personally, that's how I would approach C1 today. So if I get any rejections on any of the points I've mentioned, I will execute a sell. So I'll leave this one on M15. We keep stoking. C5, we're waiting for H1 to close so that we can know whether we are rejecting, so that we can start looking for a sell pattern. C300s, what happened? I actually executed it yesterday on a sell here. Did I close in profit this trade? I don't recall, but I was looking at it this way. I saw this impulsive move. Then price retraced, so I had a fib as well. Price gave me a nice rejection, came and closed below the 13 EMA. So I was in a sell bias, right? I also had an order block from a smaller time frame, which I was waiting for price to break it and close below so that I could add. So what happened is price ended up rejecting that zone, coming back above the 13. So this trade actually took me out. And as you can see, this particular price action came back to the equal highs and they gave a rejection candle. They also had an order block. When price came below that order block, we were also below the 13 EMA, which means price is now selling for that day. So we could have sold again if we were watching this, but I don't think I executed it. So looking at it today, I still have that selling bias. As you can see, there's liquidity, which we marked here, which needs to be taken. So we know where our price is most likely going. The only thing which we need is an entry. So I'm going to mark my points of interest. For this one, I'm looking at yesterday's high and the order block which we have on H1. That's my point of interest. This one was a ran over, so it's now invalid. I'm just going to make this straight. Okay, so point of interest 29.20 on C300, point of interest 29.20. 20. Okay, straight now. So if my price retraces into this area, knowing that I've got a sell bias, I can sell. That's number one. Number two, maybe price might not get there. So where can I sell? For this current high of the day, this would be my low. So if price breaks this level without getting up there, I can also sell, right? Now, finally, I can run a fib from this high to this low just to get points of interest where I can sell from. So from this move, you can already tell and see that price is already respecting and rejecting the 38.2 level, which means we might get this sell. Hence, we've put this level as a safe sell and a safe sell point of entry or execution. We are also trading below the 13 EMA, which gives us a high probability of this sell actually playing out. Right? If they don't respect this zone, price might then come to this broken order block, which is also a possibility, or maybe get into this 800 EMA, which is also a possibility. Again, worst case scenario is always price coming back to the equal highs or taking liquidity outside there, then coming back down. So that right there is how I'm approaching C3, and I'll leave it on H1 and keep stoking. And again, C3, I would advise if you cannot risk $25 on a trade, don't trade C3. It's for like $100 accounts and above. Because what happens is, based on the pip movement and pip calculations, you have to be able to hold at least 50 pips in loss on C3. If you hold 50 pips with the smallest loss size, that will take you to minus 25. So if you cannot hold 25, oh, sorry about that. If you cannot hold a $25 loss, then don't trade C3, right? Okay, so the next B1000 gave us a nice trade yesterday. We had a nice buy here. Before we even explain it, I think this setup is self-explanatory. If you notice, price is trading strongly above the 13 EMA. We just came and rejected. As soon as I saw that rejection on an order block on the 800 EMA, waited for M15 to break a structure, then setup was pretty much clear. Although I closed at about 60 pips, this trade continued to move. Actually gave more than 100 pips. So today it looks like we are bearish. As you can see, again, it's self-explanatory. Before we even look at multi-time frame analysis, you can already see that this price is bearish. We are trading below the 13 EMA. We are below the 50. Strong impulsive move down. TDI is also below the baseline. There's no need for us to be looking for buys unless price comes back above the 13 EMA. That's when we are going to analyze. For now, I don't see anything in terms of a buy here. Daily as well, you can see we had a nice, like, it actually looks like a doji, or yeah, you see that rejection on the 50 level there. Looks like it's an ID 50 for a possible sell. That's number one. But what I want you to pay attention to now is how price is going to react on these zones here. The 13 EMA, which is also this zone. This gray line you see here, which was a high of the week before, no, which was a high of the day before last. I think it's also last week's high, if I'm not mistaken. I'll confirm just now. And this level here, if we get reactions here, then this price can actually continue going up. So you see, we already know where price will come if it decides to come up, right? So these are just biases which we're trying to formulate. But always remember, if you see price between two major moving averages, sometimes they will play between that area for a while before you choose a direction. They can either go up or they can come down. So all we can do is wait. Right. So B1, nothing solid yet or nothing to wait for yet, besides just talking and paying attention to price. Right, I'm coming to H4 just to locate that high. Okay, so this is last week's highs. This gray line which I had mentioned, it's last week's highs. So if price comes back above last week's highs, then we might be bullish, or we could get a short-term buy. I also want you to pay attention to this level. So again, if price is playing in between moving averages on a higher time frame, smaller time frames will be giving you signals in both directions. You will see a buy here, you drop down to H1 will see you will see a sell. That's when you get what do they call that? Analysis paralysis, whereby you're seeing directions going in both setups forming for both sides, both buys and sells. It's simply coming from the daily. The daily is trading between a dynamic support, and it's also trading between a dynamic resistance. So until we come out of that area, there is no clean setup. I want you to I want you to check a quick example here. Right on this area when price was in between the 13, right here. There is no direction here until price breaks out. You can see even after breaking out, they came back below. So this whole area here, price, if you go to a smaller time frame, you will be seeing sells and you'll be seeing buys. So that's another hint maybe you need to take note of, because maybe it has happened to you whereby you're seeing buys on the H1, but M15 is showing you sells, then you don't know what to do. You simply have to wait. Do not execute. If you see such setups, do not trade. Simply means your higher time frame is trading between support and resistance levels, and it needs to break out. So if you see such setups, just patiently wait for the market to show you what it wants to do, then trade after that. Right. I hope that was clear. And again, B5 yesterday actually gave us a nice buy. But what happened with B5 is they did not retrace. They just shot up. So if you notice yesterday, I didn't share any B5 signal. I realized as much as I was waiting for them to retrace maybe into this area, or retrace maybe into this area, or even retrace to this area, none of that happened except here. But here I was already sleeping. The day was done. So right now, it looks like we are respecting this zone. This is the advantage of marking out your zones into the future. You see this zone here is from the day before yesterday, which was actually Sunday. Not using a mouse is making me so slow. But anyways, you see this level here. It was broken, slightly retested here on a smaller time frame. Price now is bouncing on that same area. But at the same time, I'm still trading below the 13 EMA. That means intraday, the trend is still bearish. It will remain bearish until I get a nice close above this order block here, where price is now trading below. If price comes back above and does this, then I can consider buys. But if we remain as we are, and if we fail to break this order block, because sometimes we might just spike, then come below. That will mean this price is still pushing down, and they might be coming all the way back down to this broken zone, which was also not retested. So for this up move, since we've marked our points of interest, you can again run a fib. If you run your fib to where price then retrace, you see now that we are playing around the 70.5 retracement area. Worst case scenario, if this price still wants to buy, is price will still come into this level here where the cursor is. That will be around maybe 79% fib retracement, which is also a level, but it's just a level which I don't use. So worst case scenario, if this price is going to buy, we're saying they might come all the way to this level. This is just a broken zone from Sunday. So if you're on H1, just mark that zone. Price will extend these lows, tap here, create a lower low, break an order block. We enter, they retest, we scale it, and we can catch a buy. The buy can be short term or long term. But either way, if it happens like that, then we can trade. So that's how I'm viewing B500. I think I'm left with only 3 minutes. I don't think we'll do these last three. Just check what we're talking here. Okay, is this a retest? Can we enter here? So remember, if you're selling, you want to enter as close to the 13 EMA as you can. So in this particular setup, I cannot sell here because I'm a little bit far from the 13 EMA. When I'm far from the 13 EMA, sometimes what will happen is price will actually continue with the retracement after you've entered. So let's say you sell here. Yes, price might come down. We agree on that. But we are open to the fact that we might see a retracement coming back to the 13 EMA. This is where I'll be entering. That time, price will be hitting your stop loss and I'll be entering. So it's always good to wait for a retracement. If there's no retracement, let's say you see price like it's here and there's no retracement, that means it's a miss. If you have not entered here, you've missed that whole move. Let price go. So for example, if this price drops from here, maybe that could be a miss. But again, we just want to pay attention to this low, which is yesterday's low, because if we do break, we might retest it, then drop. So just pay attention to that as well on C1000. The rest, V2501S step index. Okay, I think we just broke yesterday's low. So here you want to wait for a retest now. Let me quickly do it before the Zoom ends. This lead like a minute left. But I'll send the signal though. So you notice that price is broken yesterday's low, right? If price continues to drop, if it continues to drop, that will give it room to retrace and bounce right off yesterday's low and give us a sell. That will be a setup to wait for right there. But again, we are still open to seeing price come back up here. Then we can still take a sell. So if I'm on the charts, I'll definitely share the trade. The only thing we want to do today is catch one good setup. So either we'll catch C1 or we'll catch C5. C5, we have to actively stoke because it can most likely sell as well. We'll also stoke on C3. B1 has got low probabilities today. Then we can also stoke on H1. So the rest, I'll share the signals in the group. If you guys have got different views, please drop me a message in the group or on my private message on Telegram. Then we can also look at it. But for now, that's it from me today. And I'll just keep stoking on our watch list. Thank you so much, guys, for joining. Have a very productive day. Good trading.